We're back with another equity spotlight, this time featuring Gameto. Be sure to watch our previous equity spotlight videos on public and private companies. If you haven't already, hit subscribe so you don't miss any upcoming episodes. Gameto is a pre-IPO company, meaning that it hasn't yet gone through an initial public offering, which is how most public companies start. It's a biotechnology company developing cell-engineered therapeutics to target ovarian aging and menopause. The company's technology platform aims to restore cell functionality, offering a paradigm shift in how menopause and reproductive aging are treated. It was founded in 2018 and today has raised hundreds of millions from top VCs including 𝗗𝗘𝗟𝗟, Lux Capital, and Section 32. It also recently received a multi-million-dollar grant from the US government to support its menopause program. Collectively, these investments have valued the company at a whopping $130 to $200 million. And we're seeing increasing interest from investors on the platform as its clinical programs progress. In this series, we break down the key aspects of each company, assess its potential post-IPO, value proposition, and competitive landscape. So let's jump in. We see several key milestones on the regulatory front over the next several years. First, initiation of early-phase clinical trials, or PHT. 1. For its lead candidate 𝗚𝗏𝗏, its menopause therapeutic. This would occur in 2025, 2026, then transition into phase 3 trials with potential for a fast-track designation given the unmet need in menopause care. We would then see an NDA submission in 2027, 2028 with potential FDA approval by late 2028. Our bull case is that accelerated approvals driven by breakthrough therapy designation and positive phase 2 data fast-track commercialization and significantly increase valuation. However, the base case is that Gameto stays on a steady regulatory path with approval around 2028, which is in line with its clinical development timelines. The bear case is that clinical or regulatory setbacks may delay market entry and negatively impact investor confidence. This could dilute valuation through additional funding requirements. Gameto's technology platform addresses the root causes of ovarian aging by restoring cell functionality. Its flagship program Amino aims to replace hormone-dependent symptom management with a biological reset of ovarian cell health. Other assets are targeting fertility preservation and PCOS, creating a broader reproductive health portfolio. We believe that this cell-based non-hormonal approach positions Gameto to lead a new category in women health. The legacy providers are hormone-based products and services which are seeing a gradual but steady decline in usage. In contrast, newer cell-based and non-hormonal approaches are expected to capture increasing share of the $600 billion plus women's health and menopause-related market. Top developers in the space include Astellas Pharma, which developed the first non-hormonal NK3 receptor antagonist for vasomotor symptoms. There's Bayer, which is advancing a pipeline of neurokinin-targeted non-hormonal menopause treatments in late-stage clinical trials, and 𝗵𝗟𝗏, which offers an expansive portfolio of traditional and modern menopause solutions with wide global reach. These companies are securing early wins in market access, payer strategy, and regulatory engagement, setting benchmarks for newer entrants like Gameto. Our analysis suggests that market access winners will be defined by early alignment with FDA and EMA priorities, such as non-hormonal innovation and safety-first profiles, robust patient advocacy and education campaigns, and integrated digital health strategies for symptom tracking and patient engagement. Gameto is well-positioned to capitalize on these trends by combining novel mechanisms with real-world clinical utility and potential pricing flexibility. To maintain momentum, we recommend that Gameto, first, capitalize on its pre-IPO equity markets. Raise additional capital prior to a potential IPO or strategic acquisition. Post-phase 3 data readout. This would allow the company to reward early investors and employees while providing additional capital to support commercialization efforts. Second, mitigate regulatory risks by prioritizing adaptive trial designs and real-time biomarker validation to demonstrate alignment with FDA expectations. And third, build access early by developing payer engagement strategies now to accelerate time to market post-approval. Finally, extend beyond menopause by continuing to expand platform applications to fertility, ovarian disorders, and hormonal aging to increase the total addressable market.